Nothing. You lose. Good day, sir.
What did you do?
Everybody's always blaming me for everything.
So we had Obama, we had 8 years of Obama because everybody was able to blame the financial crisis that happened in '08 on Bush, when if the Fed had done nothing and if we had just taken our medicine in '01, we could have blamed it on Clinton and maybe we would have solved the problems under Bush. Now Trump is in an even worse situation because the bubble that he has inherited from Obama is far bigger than the one that Bush inherited from Clinton. And I want it to bust now. I mean, the sooner the better, so that it'll be harder to blame it on Trump. But, Trump, in a way, is his own worst enemy here, because instead of continuing what he said as a candidate, talking about the stock market as a bubble and criticizing phony government statistics, he has now embraced the stock market and embraced those same statistics. He now tweets positively every time the Dow makes a new high, and he's celebrating his government unemployment numbers. So he's basically putting his name on this economy. He's taking ownership of this stock market bubble. And so when it bursts, they may be able to blame him. And of course, the longer the Fed is able to, postpone the collapse with more cheap money, the further into the Trump presidency the ultimate collapse happens, the easier it will be to blame the collapse on Trump.
The rise of the cryptocurrencies is de facto the rejection or an expression of the rejection of the U.S. dollar as a store of value in international markets. To back that statement up, I would only point to the four largest cryptocurrencies by market capitalization and what they've done in the last 3 months. And to most viewers, listeners, they would equate, most of the people would equate to Bitcoin, which seems to get most of the press. And good reason it does get most of the press. It is the largest cryptocurrency by market capitalization at around a $34 billion market cap. And to give you an idea, that $34 billion market cap has doubled in the last 3 months. So let's just say late February, Bitcoin had a market capitalization of 16 or 17 billion, and it's doubled in 3 months. But let's just say the three cryptocurrencies that are right behind Bitcoin in market capitalization, the next biggest one by market cap at the moment, it's called Ethereum. And Ethereum has gone from a market cap 3 months ago of 1.12 billion to 15.7 billion. So it's up 13 times in 3 months. The next biggest one by market cap, it's called Ripple, currently at a 12.9 billion market cap. And Ripple had a market cap 3 months ago of 205 million. So Ripple has gone up 60 times in the last 3 months. And the next biggest one by market cap, currently at 2.38 billion, is called NEM or NEM. And 3 months ago, it had a market cap of 56.8 billion. And so, 56.8 million to today, 2.38 billion. So it's gone up 20 times in the last 3 months. And to anybody who's paying attention, I would suggest to you that if gold and silver weren't strapped in straitjackets and strapped down on gurneys with the suppressive activities of the central banking community and the Exchange Stabilization Fund in the United States, they too would have probably seen a ratcheting up of anywhere from 10 to 20 times easily in the last 3 months. Because what we're experiencing globally is a rejection of the US dollar. Pay attention to the rapid ascent in the cryptocurrencies. I would suggest to you that with price increases in the last 3 months in the top 4 cryptocurrencies of an increase of 2 times, an increase of 13 times, an increase of 20 times, and an increase of 60 times, are likely nodding their head in agreement with Mr. Stockman's prognostication that a crisis occurs sooner rather than later. And if we see these cryptocurrencies continue their geometric vector up, it would imply to me that it's very, very near at hand. And frankly, Greg, with what is coming for the U.S. dollar and the U.S. dollar complex, having it timed to the day or the week or the month isn't the big issue. The really big issue is what comes after, because there will come a point where I do believe with the precious metals, and specifically with physical precious metal, there's going to come a point where you either have it or you don't, and if you don't, you won't get any, because it won't be available. You know, I have long said that there will come a day when you cannot buy physical precious metal with US dollars. That day is approaching. That will occur. I have absolutely no doubt in my mind that it will occur. And so do you want to have physical metal today while you still can buy it with dollars, or do you want to wait until you can't buy it with dollars and watch your dollars burn? Or you can wipe your bum with your dollars. Yeah. So that's what's coming down the pipe, and you can either get your head around it, or you can get run over by it.
Look what's happening to incomes. Look what's happening to real retail sales. You have a lot of American retailers are on the verge of bankruptcy now, and it's not because they're being put out of business by the onliners. I mean, online sales have been here for a long time, and they've been growing steadily, but all of a sudden you have department store sales collapsing. And look at our inflation is now at a 5-year high, our trade deficit at a 5-year high. None of this looks like an economy that's recovering. It looks like an economy that's still in recession. And so I think ultimately the stock market's going to fall. So as the stock market falls and as the economy continues to weaken, the Fed will eventually be forced to reapply the stimulus. Not that it works, but because that's all they can do. But they will blame it on some external factor. They will say it had to do with something that nobody could have forecast, that everything they were doing in the past was right, and that none of their policies actually contributed to the problem. But now they have a solution, which is to do exactly what they did before, which will make all the problems that much worse.
The next stock market crash will be blamed on Donald Trump, but it will be the Federal Reserve's fault instead. A stock market crash is on its way, and the Democrats and the broadcast and written media are going to blame Donald Trump for it, even though it won't be his fault. The truth is that we were headed for a major financial crisis, no matter who won the election. It really didn't matter. The Dow Jones Industrial Average rose 230% since the lows of 2009, and no stock market rally in our history has ever reached the 10-year mark without at least a 20% slump. At this point, stocks are about as overvalued as we have ever known. And every other time we have seen a bubble of this magnitude, it's been followed by a huge stock market crash. Those that are hoping that this time will somehow be different are simply being delusional. Since November 7th, the Dow is up by about 3,000 points. That is an extremely impressive rally, and President Trump has been taking a great deal of credit for it. Remember though, what goes up must come down, so maybe he shouldn't be so quick to grab the applause. According to Douglas Ramsey, Chief Investment Officer of the Luthold Group, Trump's officials will come to regret gloating about the market's performance. The last president to come in at such valuations was George W. Bush, and the dot-com bubble burst soon afterward. This stock market bubble was not created by Obama or Trump or any other politician. The Federal Reserve was primarily responsible for creating it by pushing interest rates all the way to the floor during the Obama era and flooding the financial system with hot money. The economy is slowing down. Economic growth, on an annual basis was just 0.7% during the first quarter. And yet the Federal Reserve is talking about raising interest rates anyway. As I noted in an article entitled "The Federal Reserve Has to Go," 18 recessions or depressions since the Federal Reserve was created in 1913, and now we're closer than ever to yet another one. After the next crisis, hopefully Congress will finally understand that it's time to shut down the Federal Reserve. Ron Paul is someone that I look up to greatly, and he also agrees that the blame for the coming crisis is on the Federal Reserve and not Donald Trump. There are some dire predictions that say in the next year or 18 months we have something arriving worse than 2008 and 2009. The downturn is much worse. Paul, a medical doctor who took a keen interest in economics, said Trump could help the situation by pursuing good policies. But you can't avoid the correction. The correction is locked in place because the deficits are there, he said in the late January interview. The only thing he can do is allow the recession to come, get it over with, liquidate the debt. Politically, nobody wants that. So you're going to see runaway inflation before you see the country wake up. And now the economy appears to be entering a fresh slowdown. A couple of months ago, banking giant UBS warned about a sudden slowdown in new credit. And since that time, lending has tightened up even more. The following comes from Zero Hedge. According to the latest Fed data, the all-important C&I loan growth contraction has not only continued, but over the past 2 months, another 50% has been chopped off it. Early March was a 4% annual growth. The second week of May was down to 3.8%, the weakest overall loan creation in 3 years. This is exactly what we would expect to see if we were entering a new recession. Neil Howe, one of the authors of The Fourth Turning, recently warned that winter is coming. And I have to admit that I agree with him. So when the stock market finally crashes, how bad could it be? Well, one analyst that spoke to CNBC said that other historic market crashes before have averaged about 42%. If you look at the market historically, we have had an average, a crash about every 8 to 10 years. And essentially the average loss is about 42%, said Kendrick Wakeman, CEO of the financial technology and investment analytics firm FinMason. And as I have explained many times in the past, stocks would have to fall about 40 to 50% from current levels just for the stock market to get back to normal again. The valuations that we are seeing today are absolutely crazy. When the crash happens, many people will be pointing their fingers at Donald Trump. But it won't be his fault. Instead, it will be the Federal Reserve that will be at fault. And hopefully, this coming crisis will convince the American people that it is time to end this insidious debt-based central bank forever. Whether it's your first time here or you're a regular, be sure to click on the red subscribe button and turn on the notifications tab to be one of the first to know every time we release a new video. God bless you.